Welcome back, advisors. You've made it to day 13 of the 14-day Business Advisor Bootcamp. Today, we're talking about one of the most powerful tools that you can give your clients: management dashboards and reporting. These are the tools that turn raw data into clear decisions, and they can completely change how a business owner runs their company. Today's presentation is sponsored by Coleman Tanner Consulting, your source for strategic business solutions. By the end of today's session, you'll be able to explain the value of management dashboards, help clients design dashboards that track what actually matters, use AI and reporting tools to streamline updates, and teach clients how to make smarter, faster decisions with real-time insights. Business owners need dashboards for making better business decisions, and you're going to help them have it. Dashboards matter because they make the invisible visible. Instead of drowning in spreadsheets or waiting until tax season to know what's going on, your clients can see key metrics in real time. Dashboards answer the question, are we on track or not? They give owners clarity and confidence. Every business is different, but here are some core metrics that you'll see in most dashboards: financial KPIs, revenue, expenses, profit margins, and cash balance; operational KPIs, project completion rates, and efficiency ratios; sales and marketing KPIs, lead conversions, customer acquisition costs; customer KPIs, retention rates, and satisfaction scores. Your role is to help your clients choose the right KPIs, not too many, but not too few. Dashboards give the quick snapshot, but reports provide the depth. The most common reports that you'll see are financial reports, such as your profit and loss statement, balance sheet, and statement of cash flows; operational reports, that's productivity reports, capacity reports, and workflow bottlenecks; sales and marketing reports, this is your funnel analysis and campaign performance; and then there's custom reports. These reports are tailored to the business's specific goals. As an advisor, you'll help determine which reports matter to the business owner most and how often they should be reviewed. Now let's talk about tools. Many advisors use software like QuickBooks, Xero, or FreshBooks for financial reporting. For dashboards, tools like Google Data Studio, Tableau, Power BI, or even Excel with a clean design can work wonders. The tool is less important than the clarity. The goal here is to make the data simple and actionable for the business owner. As the advisor, your role isn't to build fancy dashboards. It's to make sure that the data tells the story. You're the translator between the numbers and the strategy. You help your clients understand the dashboard and then take action based on what they see. Data without action is just noise. Your job is to bring meaning to the numbers. A few pitfalls to watch out for when it comes to dashboards and reports include too much data; cluttered dashboards overwhelm instead of helping; lagging indicators only, waiting until the damage is done to measure performance; or no follow through. Dashboards don't create results, action does. Your role is to keep the system simple, consistent, and tied to strategy. Here are some pro tips for you as a new advisor. Always start with the client's goals before choosing KPIs. Use a mix of leading and lagging indicators. Leading indicators tells you where things are headed. Lagging indicators shows you what has already happened. Teach your clients how to read their dashboards. Don't just send the reports to them. Keep the review rhythm consistent. That should be weekly or monthly check-ins. Those work the best. When your client understands their numbers, they'll make smarter decisions and they'll credit you for guiding them. Today's activity is to outline a simple dashboard for a sample client. Choose 5 to 7 key metrics that matter most to their business. Decide on a reporting cadence, weekly or monthly, and recommend a tool to track them. The goal is not to complicate, it's to create a simple report that gives them clarity, because clarity builds confidence, and confidence drives growth. All right, well done, advisors.